Good morning and welcome to the 4BASEBIO PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO, Dr. Heike Lankriet. Good morning to you.
Thank you, Alex, and thank you and welcome everybody, and thank you for dialing in this morning to our full year results update. We'll take you through our presentation today, and as Alice mentioned, you can post your questions on the board there, and then we'll deal with those in the dedicated Q&A section. So today, that was quick. Today we have David and myself presenting, so you're very familiar with us by now. And as we are a public company, we need to put this disclaimer out there as well, so I'll just leave that up for a couple of seconds before we continue. Great, so on the agenda today is a bit of a review on our technologies and our platforms, and focusing on the application areas that we want to really dive into and the market opportunity around those, and then touch on a few of the achievements and milestones that we reached in 2022 and this year. To then move on to our commercial development and corporate development and the business strategy around that, and setting out some objectives for 23 and 24. David will touch on the financials, and then finally we'll have a summary where we just wrap up the presentation. First of all, the review. So as you know, we're developing two platforms. On the one hand, we're focusing on synthetic DNA, and we have an enzymatic platform that we're developing to produce these new products that are a safer alternative to plasmid. But our platform is also extremely flexible, which allows us to make these application-specific products, which then yield benefits to our clients and allow us to have a competitive position compared to some of our competitors. Speed at which we can make product is extremely important and a key differentiator compared to plasmid DNA. And of course, the entire platform is protected with a range of IP. We have very strong intellectual property already on the kind of enzymatic side of things, but also we've been filing a lot of new IP on further enzymatic processing steps, but also on products that we make within our platform. Alongside that, we have the delivery platform, the non-viral delivery platform, which is an alternative that we're developing compared to viral vectors, particularly AAVs and then LNPs. So viral vectors, AAVs in particular, they're somewhat limited in terms of their immunogenicity, so you have to dose them in a single go, and they also have some payload constraints. So maximum 4.5 kb genes can be loaded into these viruses, so that gives some problems when you want to deal with certain genetic diseases that require large payloads. Viral vectors are also extremely expensive to manufacture, so we're looking to produce a non-viral based method which circumvents these issues, so enabling repeat dosing, cost-effective manufacture, but also we want to think about targeting and getting our payload into the tissues and cell types of choice, which is one of the key drawbacks of the conventional LNPs that have been shown to be very effective in the pandemic and in the vaccine space. However, systemic use of those is still limited as these nanoparticles tend to migrate to the liver, and if you want to target anything but the liver, this can be quite challenging. So again, the platform is protected with a lot of intellectual property, and we continue to innovate and file additional intellectual property, and we're very excited about how that platform has been shaping up over the past 12 months. As I mentioned, our platform is very flexible and allows us to make a range of DNA modalities that can be tuned into specific applications. So what you can see here is the 4 DNA products that we currently have on the market. So you have HPDNA, OEDNA, OS, and OPDNA. And all of these products have specific benefits for specific applications. I mean, if we hone in, for instance, on OPDNA, That product, has the key advantage that it can feed directly into IVT reactions. So these are in vitro transcription reactions that people use to make mRNA. So whereas a plasmid would need to be linearized, which is an expensive enzymatic step that also is very critical in terms of efficiency, because all the product needs to be linearized, opDNA circumvents that and can be fed directly into an IVT reaction without the need for linearization, and hence it brings our clients a lot of advantages. Now, all of these DNA modalities can be packaged up into our nanoparticles alongside other nucleic acid modalities, of course, such as mRNA, microRNA, siRNA, or even proteins such as RNPs that are used in gene editing applications. So the nanoparticles can then be deployed across a range of different applications again as well, going from vaccines, cell therapy, and gene therapy. And whilst initially we were thinking on the vaccine space, we were going to focus more on the cancer kind of area, the kind of enhanced stability that we see with our nanoparticles compared to the conventional LNPs really gives us an angle to think about infectious diseases as well, and roll out this particle in infectious disease space as well. So in terms of the market opportunity, of course, central to what we do on the DNA platform is the plasma DNA market. This has now grown to about 1.3 billion. I mean, we've put some numbers into our annual report as well, and you see, I mean, some of these numbers vary somewhat from report to report. There's quite a few reports out there, but the general trends are the same, where the markets are becoming quite sizable, into the billions, and the compound annual growth rates remain very, very high for the foreseeable future. So the pDNA market is kind of our main market for our DNA products. And then, of course, the non-viral delivery market, currently valued at 2.3 billion, is the main market for our Hermes nanoparticle platform. But you can see all these kind of other sub-markets around that: viral vectors, mRNA, gene editing, and DNA vaccines. And of course, our products feed into these markets as well. So there's a lot of opportunity. And as we can open up and validate new application areas, we really can open up additional markets that we can feed into and create value from. So in terms of milestones, so I mean, it's been a pretty exciting year, 2022, and the first half of 2023 has also been very good in terms of the progress that we continue to make. I think, in terms of DNA product validation, we've made great strides. I think we have got really solid data packages on the use of our products to make mRNA and to make viral vectors such as AAV. And we're coming on a long way on the gene editing side as well. On the DNA vaccine side, again, we have great collaborations going, where we can really see the utility of DNA products in DNA vaccines, particularly personalized cancer vaccines. We're very excited about that opportunity. And you might have seen the press release that we announced, I think it was about 2-3 weeks ago, about the supply agreement with Neomatrix, and that feeds into that market segment. From a GMP perspective, we've completed the build out of our clean rooms, and our QMS system has been built out quite substantially over 2023, and we're putting the final touches to this in 2023 to really get ourselves into position to supply GMP compliant starting materials for viral vectors and mRNA production. That's kind of the first market opportunities that we want to enable ourselves for. So from a commercial perspective, 2022 was quite a milestone as well. We made our first sales on the DNA side, and we also made some sales on the Hermes side. And of course now the main objective is to start scaling our client pipeline and bringing additional clients through evaluation into supply of DNA products. So from a commercial development point of view, I think it's probably good to explain a little bit how the client life cycle goes, and how we bring our clients into onboard our clients into DNA supply. So it all starts off with exploration kind of phase. So we go to a lot of conferences where we meet clients or prospective clients. And And then we build relationships and essentially position the technology and the products as great alternatives to plasmid, and that often then leads to an interest from these potential clients into setting up technical discussions and explore how they could evaluate our products and their processes. So we then move into like an evaluation stage. Once the client has evaluated, it really comes on to onboarding the client to commercial product, which means we need to sort out a lot more paperwork, including MTAs and potentially supply agreements. And then that leads to the sale of products. Now, typically our clients will start with research grade material. The type of client that we're looking to attract will sit in discovery or early preclinical kind of phase within their development programs, where research grade materials are required. And then as they move through their kind of own development program and move to later stages of preclinical work or indeed clinical work, they will require higher grade batches, and we will move from research grade to first high quality grade material, and then ultimately to GMP grade material. So this is kind of the product stages. So first was how the clients move through the funnel, and this is kind of what type of product they buy at the different stages. So as mentioned in the evaluation stage, we're looking at research grade product. In most cases, clients will use our off-the-shelf materials. So we have some viral vector products that people can use. So we have some rep caps and some transgenes and some helpers that people can just buy off the shelf and then use these in their manufacturing processes and see how these products compare against alternative plasmid solutions. Once that is done, then the clients will want to try their own sequences in their real discovery or early preclinical work. And at that point, we start making these specific custom batches for our clients and research grade material. So this is at the point when the client has been onboarded. And then, of course, as the client moves into GLP tox, they'll need higher quality engineering batches and produce those. And then ultimately, as they go into clinical phases, they will need their GMP batches, which is then the third kind of product that we'll customly make for them. Right, so in terms of business strategy, as mentioned in my first slide, we have two platforms that we're developing, right? So on the one hand, we have the DNA synthesis platform, and on the other hand, we have the nucleic acid payload delivery system. So both of those platforms are progressing nicely, but of course, you can clearly see that the business model behind them can be slightly different. The DNA business is more of a CDMO custom product kind of business, whereas the non-viral delivery platform requires more fee for service and then kind of validation and licensing opportunities around that. So for us on the DNA side, the real objective now is to increase our capabilities to onboard more clients. So we've been really investing quite heavily in setting up our NPD teams and MSAT teams, which are focused at bringing in these new clients, onboarding these new clients, bringing in these new sequences, running them through our platforms, and getting them ready for tech transfer into manufacturing. So as that scales up, revenues, of course, will scale. And then as our clients move through from research grade into high quality and GMP, revenues again become scale and become more significant. On the non-viral delivery side of things, things are slightly different. We're not as far in terms of commercial development compared to our DNA platform. So there, we are currently evaluating the unique selling points of the nanoparticle in vivo on a range of different organs. And as mentioned, the stability of the particle is something that we are extremely excited about, because I think it gives us opportunity to feed into market opportunities that potentially we weren't considering 12 months ago. So in terms of value realization for our shareholders, of course, if you look at the top two sections, the CDMO and the licensing part, those are revenue kind of driven angles. But as mentioned in the previous slide, for the DNA side, this is very much going to be a product-based supply, a high margin product-based supply, which will lead to revenues and ultimately profitability. Whereas on the non-viral platform, we can see this more as a licensing kind of business model. Now, that said, on the DNA side, several of our clients are also considering or asking the questions whether the technology can be tech transferred in and whether they can bring this in-house. So there could be opportunity as well to revert some of the product supply into a licensing model further down the line as well. Now, ultimately, the big shareholder value realization, and from our perspective, can lead from corporate transactions, which is really driven by the technology validation and getting our products clinically validated as well. So demonstrating that the products are suitable for use in clinical programs, which is one of the key objectives for us for the next phase of the company's development. So if you look at evaluation events, I mean, of course, everybody always looks at revenue growth, and revenue growth is important, but there's a lot of other things that happen in advance of revenue growth that are very important in terms of added value and value inflection points to the business. So technology validation and opening up these application areas, which has happened in 2021 and 2022, is a major achievement for the company and really has made commercial deployment possible. And then in the next phase, of course, as we start with the commercial deployment of our products, getting into the clinical programs, getting through the regulatory kind of approval processes, and how GMP plays into all of that too, they're really big value inflection points that the company is working towards in the near future. So putting all of that together, if we look at 2023, what are we trying to do? Well, of course, the next phase is now manufacture of GMP batches that we can sell to our clients, and then grow our commercial pipeline, which ultimately then will lead to revenue. But and these are very much commercial driven objectives, but alongside that, I think we also need to think a little bit about the longer term too, and we continue to invest in research and development, and we are excited about new DNA modalities that we can develop, such as single-stranded DNA, circular DNA, both single and double-stranded DNA, which particularly in the gene editing kind of space, is gaining a lot of traction, and we see a lot of opportunity there to make DNA modalities that are simply very difficult to make through plasmid-based methods, whereas with our synthetic flexible platform, we can make these modalities that our clients are looking for. In 2024, that will then lead into GMP accreditation, or working towards GMP accreditation. I mean, we're somewhat subjected to the lead times with MHRA around that too, and then ultimately supplying our products into these clinical programs and really scaling that up and scaling up the revenues as a result of that. So with that said, I'll hand over to David.
Thank you, Heike. So looking at the financials and looking back at 2022, this really was about the continued investment in the technology platform and the infrastructure of the business to deliver the commercial agenda. And I think, as we indicated during the course of 2022, the loss for the year and the cash burn was expected to increase versus 2021. So in terms of overall the results for the year and the position on the balance sheet, this is very much as we expected at the outset. Turning to the income statement, perhaps it's useful just to highlight a few features here. So I guess one thing that will attract attention is where the revenues sit versus the prior year. And that's really a product that I think as a longer term shareholders will be aware of where we are positioned versus the legacy income. So that dipped significantly during the course of 22 and really isn't particularly well supported. And that's been offset by initial revenues on DNA and Hermes, as previously indicated. For us, though, probably the more notable captions are operation expense and R&D. So operation expense reflects our investment during 2022 in manufacturing and quality, and also obviously associated expenditure that goes with the P&L related to the clean rooms. And the R&D is really the continued development of the platforms. And alongside what sits within the income statement, we also have another 600,000 or so capitalized during the course of the year as well. So you can see there's been fairly substantial ongoing investment, both in manufacturing and also in R&D. And then perhaps just to highlight towards the bottom of the income statement is the tax line, which is R&D tax credits, principally from the UK, but also a small amount in Spain. So that all manifests itself in the balance sheet, and clearly the most important number here is cash and cash equivalents. And on the following slide, I'll just go through the cash flow briefly, but really this is the product of the investment in infrastructure and the ongoing investment, so that during the course of the year, there was a significant cash burn, but it also includes an initial drawdown under the 2Invest loan facility, which took place at the end of the year. And you can see the offset in that in long-term financial liabilities, which clearly shows the increase in that line. The other point to highlight is other current assets, which have grown notably, and that's really to do about expected recoveries on R&D tax credits. So then moving on to the cash flow. Really, this summarizes the position I've described. Operating cash flows, 2 million, the outflow is 2 million higher than the prior year. You can see the ongoing investment in property, plant and equipment, and also capitalized development of intangibles, which is a combination of capitalized development costs and some expenditure relating to patents. And then finally, the cash inflows from financing activities. Again, longer-term shareholders will be aware that there's a recurring outflow on this line related to soft loans in Spain. Slowly but surely, we're coming to the end of that. There's a bit more to come, but that's progressively moving forward. And clearly, that positive number there reflects the amounts drawn down from 2Invest. Very briefly then on 2023. So it probably won't surprise you when I say that cash burn is set to increase in 23. Clearly, we continue to grow the business through 21, through 22, and through 23. And that's really about the infrastructure and resources we have in-house. So both from the manufacturing and R&D particularly, it's very much a model of relying on those internal resources. We do, of course, expect revenues to increase during the course of 23, but it's very difficult at this stage in the revenue life cycle to offer any meaningful indication on how that might unfold. And we don't expect that to be offsetting the increases in expenditure over the course of the year. So in terms of funding the business moving forward, we will continue to draw down on the 2Invest loan facility during the course of the year. And we expect to end 22, 23 and 24 in a position that we have a cash runway that moves forward into 2025.
So, taking over from David, and again, the final summary slide here, which is kind of recapping the business and the opportunity in front of us. So, as mentioned, we have very disruptive technologies which have been protected with intellectual property, and the intellectual property portfolio continues to grow. Some of our later filings, earlier filings from 21 and 22 are now moving into PCT stage, and we're looking to get some grants on those in the foreseeable future. And alongside that, the technology has now been validated in a range of applications, which has enabled us to start building and growing our client pipeline, which will then lead to revenue generation. From a GMP compliance perspective, we've made great strides forward, and we want to be in a position to sell GMP compliant starting material into viral vector production and mRNA production. in 2023, and then as a result of that kind of progress, we now are in a position to start securing clinical supply deals with clients, and we hope to secure more of those deals in the near future. So with that said, I would like to round off here and hand back to Alex, who can then open up the Q&A session.
Hi, Keith, David. That's great. Thank you very much indeed for your presentation this morning. And if I may bring your cameras back up, ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Hi, Keith, David. As you can see, we have received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. If I may hand back to you and kindly ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end. Thank you.
Thank you. So, so David, we'll just dive in, shall we?
Okay.
So the first question was about the market opportunity. It's large, but we're really focusing more on who our competition is and what we're seeing in the market space. The incumbent product in the market is still plasmid DNA. So from that perspective, that's our main competitor. So it's Aldevron, it's the VGXI, the big CDMOs in this space that make plasmid that are the main competitors from that perspective. On the synthetic DNA space, companies who are in a position to really think about supplying clinical grade material, there's very few of those. I mean, really, there's ourselves, and then there's Touchlight that we see in the market space as well. But alongside that, we see very little other companies at the stage that we have reached. That doesn't mean that more companies can't move in, but at this stage, the synthetic DNA space is definitely fairly limited in terms of direct competitors. I hope that answers the question. The second question was so it's more about our revenue generation model, right? So what visibility we expect to see from revenue generation. So I mean, we have a slightly different approach compared to the plasmid providers. Plasmid providers, the queues are fairly long at the facility, and the production times are fairly long as well. So typically, if clients go to plasmid DNA manufacturers, they're looking at lead times of 12 months. We want to significantly reduce that, which also, of course, means that you have less visibility on the book, and your book might only be 3 months deep rather than 12 months deep. That said, we do expect clients to readily move through from research into high quality into GMP. But at the stage that we are now, it's very difficult to give you kind of clear numbers or rates on how fast and what the attrition rate is in that process. So I think we need to wait a little bit longer before we can make meaningful comments on that. Okay, so the next question is about GMP certification and when we expect GMP certification. I think there's always some confusion around GMP and what that really means. I think that the important thing we've always said is that we want to supply DNA materials into viral vector production and into mRNA production. Those are the key markets that require lots and lots of DNA, and those are the markets we want to feed into. It's important to note that for those markets, you do not need GMP certified material. You need material that is made in compliance and in accordance with GMP rules as a starting material for those processes. So that's something that we are very close to achieving now, and we really want to get that type of material supplied into our clients' clinical development pipelines. From a GMP certification point of view, if you want to bring DNA products directly into the patient, so essentially our material will go into a patient, that's the point where you are making an API or a drug substance or a drug product, and that's where GMP certification is required. So we have a roadmap in place to get us to that position, and we expect to achieve that in 2024. But as we said last year as well, you are somewhat limited to the regulators as well, and the speed at which they move at too. So whilst we can have objectives to achieve this, we're always somewhat at risk with the timeline, given the speed and the pace at which regulators can sometimes move. David, do you want to answer this one?
Yeah, sure. So our views on sorry, this goes to the valuation of the company and whether we consider it to be undervalued. I think our views in the company haven't changed. Having said that, market context has changed, and during the course of that market context, while there's been some fluctuation in the share price, it's also actually been pretty robust compared to many other companies in our in the broader sphere. So really for us, it's the challenge around potentially raising equity is considering our financial position, and obviously over the course of 24 particularly, we're going to need to give some consideration to that if indeed the cash runway is expected to go into 25, possibly beyond, but clearly we need to see in due course where we sit. So recognizing where the markets sit and recognizing that this is an agenda item that we need to move forward, there eventually may come a point where we need to recognize the requirement to fund the business moving forward. That depends on where we are in terms of revenues. It also depends on where we are in terms of overall expenditure. So our overall position on the valuation and the equity raising hasn't really changed. We're well funded through 23, and we're certainly funded into 24 and beyond. Being pragmatic, at some point, it's a consideration that may need to be addressed.
So then the next question was about the particles and whether we would expect, a transaction in that space to be non-exclusive for a particular disease area. Yeah, so that's typically how we see that side of the business. Well, it's a licensing model, so combined with a fee-for-service model. So clients would come to us and they would, like to deliver a specific payload for a specific disease indication within a specific target organ. So we would then develop that particle and help with the validation of that particle. And alongside that, we would give our clients the option to then license the particle for that specific indication. That could be exclusive, but it could also be non-exclusive depending on client requirements and client needs. Some clients may also want to include additional indications around that nanoparticle that we're developing. So it really depends a little bit on client needs and client objectives, but fundamentally it is a license-based model rather than a product-based model. I think that was the last question, unless there's any more questions that we've missed. I think that would round it up, so I'll hand back to Alex.
That's great, Heike, David. Thank you for being so generous with your time, and I believe you have addressed all the questions for investors today. And of course, the company will review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Heike, could I please ask you for a few closing comments?
Yeah, so I think, David and I are really pleased with how the company is developing and shaping up. We're very excited with the platforms and the strength of the platforms. And now the commercial development of the company is picking up, and the first clients are starting to build up as well. So we think, 2023 and 2024 will be very transformative years for the company again, particularly on the commercial side. We expect to see some good changes, and that, of course, will reflect in shareholder value. So yeah, we look forward to updating you again in 6 months' time and keep you abreast of developments.
Heike, David, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of 4BASEBIO PLC, we would like to thank you for attending today's presentation. That concludes today's meeting, and good morning to you all.